per share. We started with income statement. We started with the introduction. I'm sure we are fine with the introduction. We started with the income statement that we are moving into earnings per share. Very, very important topic. Like I said, you could see like 2 to 3 of those questions in your exams. So I want to make sure that everyone is on the call. So like I said, we've started with the income statement and we are moving into a very important topic. So like I used to say, there's nowhere they will ask you for definition, actually. So let's start. Let's see this. So, we said there are 3 forms of capital. I don't know, we'll start with that. There are 3 forms of, please, if there's any part you don't get, please call my attention so I can re-explain. There are 3 forms of capital. The first one we talked about was ordinary share capital. See this type of people, when they come and meet you, you tell them that, oh, probably they should invest in your company. They should invest in your company. And once they invest in your company, they wait till the end. Maybe you declare profit before they can get dividend. That's the first set of people, ordinary share capital. So they wait till you declare dividend and they collect what? They wait till you declare profit and they collect dividend. I mean, that is if even the company wants to declare dividend. You understand? So ordinary share people, let's say, is the most what's it called, risky. I hope that English is correct. It's very risky because if there's no profit, if there's no dividend, you are getting nothing. You just put your capital and nothing. When high risk, high return. When there's high risk, there's high return. When you start portfolio, you will see what I'm saying. When there's high risk, there's high return. So automatically, if for instance, that particular year, people made so much money, automatically you will know that your returns will be so high. Look at the case of Microsoft Teams and Zoom. Let's say you invested as ordinary share capital now, and probably they've not been declaring dividend for so many years. See that period of COVID-19, when COVID-19 came into place. COVID-19 came into place and what? Everybody started, you can see the way their share price went up, the dividend they declared, everybody was so happy. So if you are ordinary share at that period, you'll be enjoying your dividend. You'll be really enjoy your dividend. So that's the first set of what's it called? The next one is preference shareholder. Preference shareholder. You see this set of people, when they come and meet you, they tell you that, okay, I would invest in your company, but I'm looking at this company. It's not something that is actually going to make money anytime soon. It's not something that is going to make money anytime soon. So what would you do at that point in time? The first thing you will do is, okay, I will invest my money, but I'll be getting a guaranteed sum of money every annually. You will tell the person that, well, I will invest my money, but you will give me a guaranteed sum of money. Let's say, for instance, now you invest maybe 1M. I'm telling the person you'll be giving me 50,000 naira, a guaranteed sum of dividend annually. I don't know whether you make a loss or you make a profit, you have to give me. So that is preference shareholder or those preference. So you are guaranteed a particular amount of dividend annually. The next person is debenture. Debenture. So once this person comes to meet you, you give him your business proposal and you tell him that, okay, you want to invest in the company. Okay, I'll borrow you money. If you start fixed income, I'll borrow you money. But you'll be paying me a particular amount of interest annually. You pay me a particular amount of interest annually. And once you pay me that particular amount of interest, then at the end of the tenure of the loan, you pay me the interest plus the principal. It depends on how you guys have structured the loan. Are you guys following me? Are you guys? Hello?
Yes, I can hear you.
Okay, thank you. Thank you. So let's continue. So as I was saying, so this preference dividend holder, they come up with a strategy and tell you that, I will invest my money and I will get a particular dividend annually. Sweet, interesting. Then the last one is the debenture holder. The debenture holder comes in and they give you a certain amount of money. You pay interest, whatever, quarterly, monthly, whatever you guys have agreed on. Then they collect the principal plus the interest at the end of the tenure, making 3. Then the last one, which is also now common, you call it stock option. Stock option. One good thing is if you have a company, and you employ somebody to manage the company for you, the truth is they can mismanage your company and nothing will happen. They can mismanage your company and nothing will happen. As I was saying, so the stock option, like I was saying, there's this particular one, the stock option. So if you have a company and you employ somebody to manage a company for you, there is possibility that the person can mismanage your company and you will not know. And that is what's happening to all those big companies that you see them fail later on. But what you can do is to align the company's interests with the person managing the what's it called? Managing the company. I say, okay, if you perform very well, maybe I'll give you 2% of the shares of the company. You understand? That's just to encourage the person and say, okay, instead of me mismanaging this company, and I know that I have shares in this company, why would I mismanage the company? So that's the last one and the fourth option. Are we together? So let's now move back into the CFA. There are two forms of capital structure, simple and complex. Simple, every one of these particular, whichever one you start with, you remain that for the rest of the company's life. Let's say, for instance, you're ordinary shareholder. You remain ordinary shareholder all throughout the company's life. If you're a preference shareholder, you remain preference shareholder all throughout the company's life. If you are a debenture holder, you remain debenture. So you can't switch if you're a simple capital structure. That one, there is no issue. And I think simple capital structure is actually very common in Nigeria, where you have most of those people not being able to switch from any one of them. And you'll have agreed at the beginning of the contract, like, okay, not that you will see that the company is now performing, you now want to be a shareholder. And so if you're ordinary shareholder, you remain ordinary shareholder. If you're a preference dividend holder, you remain preference dividend holder. If you're a debenture holder, you remain a debenture holder. So what curriculum is saying is that if you see the curriculum, they will tell you that a simple capital structure, there is no potentially dilutive securities. Potentially dilute, that means nobody can switch into any of those class. Please, if you have any question, you can stop me at any point in time. Then the second one is complex capital structure. Complex capital structure, you have the ability to move from any of those class into ordinary share capital. That is, you will have stated it at the beginning of the contract. Not that you will now see that because of Zoom is performing very well, or Microsoft Teams is performing very well, you now want to switch into ordinary share holder and start making money. It's not possible. But you'll have agreed at the beginning of the tenure that, oh, I will start as a preference dividend holder. Then after I see that the company is performing well, I can decide to come into ordinary shareholder and I'll be fine. Do you understand? So it is allowed. That is if you have agreed at the beginning of the contract. Are we together, everybody? Is Matilda with me? Is Oluwatosin with me? Tio and Sama, are you with me?
Yes, 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 yes.
Yes.
Okay, thank you. Please, if you have any question, please drop me at any point in time and I will explain again, please. Okay, so how do we calculate? Like I said, there's no way they will ask you for definition. So how do we calculate our basic earnings per share? So whichever question you are given, the first thing you need to do is to calculate your basic earnings per share. Basic earnings per share. So let's go. How do we calculate our basic earnings per share? So the first thing you need to do is what? Calculate your basic earnings per share. So how do we calculate that? So your basically, if you want to write, you can do that. So that's your net income minus preference dividend divided by weighted average number of shares. Net income minus preference dividend divided by what? Weighted average number of shares. If you all get that, please let's take note. Net income minus preference dividend. You know why we are subtracting preference dividend? Who wants to try, please? Why are we subtracting preference dividend? Who wants to tell me why we are subtracting preference dividend?
No idea.
Okay. You know, we said that this particular person is what? Is going to get a fixed amount of money, right? That is why you, whether you are making a loss or you're making a gain, you have to consider that person. Do you understand what I'm saying? Because I have told you from the start that I will invest my money and I would what's it called? I will invest my money and I will get a fixed amount of dividend, what's it called? Annually. So this person has told you. So why would you want to, what's it called? So you have to pay that person whether you make profit or loss. That's why you see that net income minus preference dividend. I don't know if that's fine.
Sorry, this calculation, is it under complex capital structure?
Okay, so whichever one you are giving, thank you for the question. Please, I want to hear you guys ask plenty questions so that we'll be fine. At the beginning of the time, once even whether you are giving a potentially dilutive or not dilutive, the first thing you need to do is calculate your basic earnings per share, which is the formula I've given you. Net income minus preference dividend divided by weighted average number of shares. Are we together?
Yes.
Thank you. So whichever one you are giving, immediately you are giving, just make sure you calculate that one first. And I'll walk you through. So the truth is, there are different ways in which you calculate it. But I will give you what I feel is the simplest. Like I used to tell people, immediately you are done with this earnings per share, the rest of the topic in FRA or financial statement is very easy. You can increase it a bit so everybody can see it. Yes, perfect. That's very good. So now, so weighted average, let's take it one by one. You know, we talked about preference dividend. Preference dividend are people that will get a fee. That's why you see that any calculation, you have to include this preference dividend because they have to be, what's it called? You have to pay these people. Whether you make profit or loss, you have to pay them. So they don't care because you have agreed to pay these people. That is why you see that you see net income minus preference dividend. Do you understand? So that is it. Now let's take it one by one. How do we calculate our weighted average number of shares? You can go down a bit. Go down a bit. Yes. So the first thing you need to know, I'm going to talk about the first thing you need to know. So what's a stock dividend? What's a stock dividend? So a stock dividend happens, the normal one we know is a cash dividend. So whatsoever reason, instead of them giving you cash, okay, let's say the company has made a profit for this particular year and things are going fine and stuff like that. So instead of them giving you cash, they give you more shares. That is stock dividend. It is as equal as saying you are getting cash. So instead of giving cash, they give you more shares. Sweet. Does that make sense, everyone? Are we fine? Are we fine?
Yes.
Hello. Does that make sense? So instead of giving you, yes, instead of giving you what's it called? Instead of giving you cash, they give you more shares. So that is stock dividend. So stock split. What does stock split mean? Stock split. What does it mean? Stock split happens when you want to keep your share price in a particular range. Do you understand? Stock split. So there's another one which is reverse stock split. When you get to level 2, you talk more on this thing. But for now, this is what happens this is what matters in your LOS. That's why I don't want to go into details. It is your LOS you use to study. Once you use your LOS to study, you are fine. So your stock split tells you that, oh, okay, you want to keep your share price in a particular range so that people can afford it. Do you understand? So you feel like, okay, let's take a very good example of orange now. One orange. Do you understand? One orange. The orange is 100 naira when you're buying a particular orange. That's just one. And you want people to be able to afford this orange. What you do is you just divide it into different quarter. Let's say there'll be 4 quarters. There are 4 quarters in one orange. And it's round, Abby. When you divide it, it just be 4 quarters. That will be to join everything together. You now be selling 1 quarter will be selling for 25 naira. I don't know if that makes sense, everybody. Are we together? Hello, I don't know if that makes
Yes, yes,
sense.
yes, yes.
Yeah, so 1 quarter will now be selling for 25 naira. So it is now cheaper for people to buy. Instead of them buying that particular one for 100 naira, they now be buying, oh, okay, so a quarter is now 25 naira. So in total, the amount of the orange will still, one full orange will still be 100 naira, but a quarter will now be 25 naira. So instead of once it's so expensive, it is now make sense for people that okay, since it is now 225 naira, it is now cheaper for me to buy instead of saving money to be able to buy at 100 naira. But the total amount you have to pay is still, if you are buying one full orange, is still 100 naira. So nothing has actually changed, but it makes it cheaper for people to buy. Keeps your share price in a particular range, which makes it cheaper. I don't know if that makes sense, everybody. Are we
It
together?
does.
Okay, thank you very much. Perfect. That's okay. So the last one we want to talk about is share repurchase. Share repurchase. What is share repurchase? It's when the company decide to buy back its shares from the public. I don't know if that makes sense. When the company decide to buy back its shares from the public, for whatever reason, they are coming to buy back the shares from the general public. That's share repurchase. So let's go. Let's take this very good example. So there are two things. There's the numerator. Numerator
Sorry, I
is
have a
net.
question.
Please go ahead. Please go ahead.
So when a company decides to buy back their shares from the public,
Yeah.
why are they doing that? Any
Okay.
particular reason?
So there are so many reasons why you might do that. There are so many reasons. One might feel like, okay, you feel like maybe you have a shares of a company. You see that, okay, maybe I feel that you are having too many shares you're having too many shares in this company. You understand? Maybe I feel like you have this particular person is getting too many shares of my company. The next thing, I'll just open negotiation with you and say, okay, I know the shares is 37 naira. I will pay you 60 naira. Will you sell the shares to me? You understand? I'll pay you 60 naira for you to sell the shares back to me. So it's just for me to be able to mop up the shares and have control. So there are so many reasons why you might want to do that. And as I noticed that this person is becoming control. The person has control in my company. This person has control in my company. So what can I do? Okay, let me buy back the shares from this person. I'll just open conversation with them and say, okay, how much is the shares worth now? 37 naira. Okay, how much do you want to sell it? Person said, no, I don't want to sell. Okay, I'll buy it from you 100 naira. You'll be like 100 naira, 37 naira, and it's worth 37. It's something you can quickly sell. You understand? So that's why people buy. You might decide it might be for some reasons, like you want to have control. It might be for some reason like you just want to mop up your shares from the public. You understand? So there are so many reasons why people buy back their shares, which is very interesting. And for those that do corporate finance, or you see the reasons, all these things, companies that might be very funny. They might feel like, okay, this person is now having control. Hey, what can I do? You might decide to buy back the shares from that person. Give the person a huge amount of money, the person cannot resist. Buy back. So it depends on your own motive. So motive are different. You understand? That's just one of those motives why people can feel like, okay, let me buy back my shares from the public. You understand? I don't know if that makes sense.
Yes, it does. Thank you.
Okay. Thank you very much. Thank you very much. So
So I have a question.
please go ahead. Go ahead. That's why we are here.
So
Please go ahead.
I quite understand stock dividend, right? But I don't
Okay.
still really understand stock splits, right?
Okay.
So I know you said stock split is when company decides to split, divide their shares so that it will be easy to be bought, right? But why would like what did they intend to achieve? What did they intend to achieve with the stock split? The reason why I'm asking that question is because what I see on the screen, like saying that 50 stock dividend and stock splits wants to achieve the same thing. I don't understand how.
Okay. So they are not that okay, let me explain. They are the same in terms of like you're getting more shares. You are getting more shares. Okay, so stock dividend and stock split, it is more shares. There's no cash involved. Yes, I think that's where the similarity is. But stock dividend is you are getting more shares instead of you getting cash. while stock split, you are actually what you have done is basically you are making your share price, you have reduced your share, so it will be easier for people to buy. Let's say, for instance, now let's use share orange, the example we gave, or one orange now. Let's say the share price of what's it called? Maybe a GT is 100. Are we together? A GT is 100. And to be able to make people buy, you see it's very expensive for people to buy. And you feel like, okay, what can we do? You now be like, okay, if you own one particular orange, you will now decide to start selling per quarter. You understand? Instead of selling a full one orange, which is one orange that you are selling, you decide to start selling per quarter. A quarter will now be worth 25 naira. With that, it will be cheaper for people to buy. Do you understand? So it's just to make it cheaper for people to buy. That's what you are doing. It's still worth the same amount of money. One orange will still be 100 naira, but a quarter of orange will now be 25 naira. So if you are buying two
Okay, I
quarter,
understand.
you'll be buying 15 naira. If you are buying three quarter, you'll be buying 75 naira. So if you still want to buy that one full orange, it's 100 naira.
Yeah, I
It's just
understand.
to make it cheaper for people to buy. Yes. Make it cheaper for people to buy.
All
Just to
right.
make it cheaper for people to buy. Makes sense now, right?
Thank you. Yeah, makes sense.
Okay, please. Any other question? Okay. So let's talk. Let's look at this question together. So the rule is, let's take it from this one. Please, one of the first rule is use your finger to count the number of months available. Are we together, everybody? Use your finger to count the number of months available. So one month, January, February, you can use your finger to January. So there are 12 months, January, February, March, April to December, 12 months. Are we together? Then whenever a particular, what's it called? I think I will need to share my screen so that I'll be able to solve this question with you. You understand? But I will also need this question. That's my concern. Okay, so let's see how we can do it first. Let's see how we can talk through it. Then if you didn't get it, I'll solve it. So Johnson Company has a 10,000 shares outstanding at the beginning of the year. Are we together, everybody? Have a 10,000 shares outstanding at the beginning of the year. That means at the beginning of the year, January 1st, their share is 10,000. On April 1, so I don't know if you guys can, if you have a sheet of paper there, we can do this together. Let's see what we will get together. Are we with our pen and calculators and biros? Eh?
Yes, we are.
Are we together, everybody?
Yes, we are.
Okay, so let's look at this. Okay, so Johnson Company has, please get your pen, your sheet of paper, and your calculator. Johnson Company has a 10,000 shares outstanding at the beginning of the year. So just right, January 1, 10,000 shares. You understand? So how many months is this shares running from? Look at this for instance now. If you are joining a company in May, if you are joining a company in May, and in December they are doing profit sharing, how many months will you get for? Yeah, talk to me now. How many months will you get for?
7.
Thank you. So automatically they will not give you from January. And that's why if you've joined a company before and somebody is telling you that, okay, makes sense. Okay, we want to do profit sharing this year. So it is people that started from January that will get the full 1 year. You understand? So if you are joining probably September, you only just get for September, October, November, December. So the same rule applies for this stuff. Understand? It applies for this stuff too. So that's how it works generally. So from January 1, we have what's it called? Johnson Company has 10,000 shares outstanding at the beginning of the year. So it's going to be January 1, which is going to be 10,000 times how many months? 12 divided by 12. Please, let's write that in our notes. 10,000 times 12 divided by 12. Did we all get that? Hello, did we all get that?
Yes.
Okay. So the next one. On April 1, Johnson issues 4,000 new shares. So new shares comes in April, Abi April 1st. So it's going to be 4,000 times. So how many months from April to December? Yeah, everybody use your fingers to count. April to December.
8 months.
8 months. So use your fingers. Don't subtract. Don't do 12 minus 4 or something like that. You understand? Use
It's
your
9 months.
fingers. Thank
It is
you.
9 months.
Thank you. Perfect. Don't subtract. If you subtract, you get it wrong. Go. That's why I say use your fingers. April 1, April, May, June, July, August, September, October, November, December. 9 months. Perfect. Is that clear with everybody? Matilda, are you fine?
Yeah.
Yeah.
Okay. Okay. So that's 9 months. That's 9 months. So it's going to be 4,000 times 9 divided by 12. Are we good? So let's move to the next one. July 1, Johnson distributes a 10% stock dividend. So if there is any dividend, so every shares that are above the dividend will enjoy, Abby. Are we together? Are we together, everybody? Are we together? Can you guys hear me? So every
Yes,
shares
we
that are
can.
Yeah.
above, yes, every shares that are above the dividend will enjoy. So automatically, people that have shares from January, that have shares from April, they will all enjoy the dividend. Abby? So you go to that one that you have 10,000, which is January 1, 10,000 times 12 divided by 12, multiply it by 1.1. Multiply it by 1.1.
No. Hello?
Are you following me? Are you all honest? Are you getting it?
No, where's the 1.1 coming from?
Okay, thank you. Thank you for the question. You see that this person, they are giving you a stock dividend, Abby. That is more shares, Abby. I mean, look at it on July 1, Johnson distributed a 10% stock dividend,
Yeah.
Abby.
Yes.
Thank you. So if you have one before, you are getting 0.1 of it. So for instance, now if you have 100, you get extra 10. I don't know if that's clear.
Yes.
So that is you now divide 110 divided by 100. That's how we got that 1.1. 110 divided by 100. So if you have 100 before, you be getting extra 10. I don't know if that's fine.
Yes.
Okay, makes sense now. So that's why January 1, the one that is 10,000 times 12 divided by 7 times 1.1. The next one, which is 4,000 times 9 divided by 12, you multiply by 1.1 also because they are both when they are declaring dividend, so they will enjoy it. Sweet, can we move ahead?
Yes, we can.
Okay, so the next one now says that stock dividend on September 1, Johnson repurchases 3,000 shares. That is, he's buying back 3,000 shares from the public. Abby, are we together? He's buying back 3,000 shares from the public. Are we following everybody? So if you are buying back 3,000 shares from the public, it's going to be, yeah, that means it's a subtraction, Abby. You are taking it out from the shares, Abby. So now September 1 to December is how many months? September 1 to December is how many months?
4 months.
4 months. Thank you. So it's going to be minus 3,000 times 4 divided by 12. Minus 3,000 times 4 divided by 12. Abi? Now, since is there still any other information again? No, now, so with that, let's calculate our weighted average now. So I expect that you
Sorry,
have,
minus 3,000 divided
yes,
by.
times 4 divided by 12, times 4 divided by 12.
That July one is just 1.1, right? But there was no, we didn't do any calculation for it. We just knew that the 10% was 1.1, so we added it to January 1 and April 1. Hello?
Yes, I can hear you. Is a stock dividend? Yes. Yes, it's fine. It's 1.1. Yes, it's fine. Any other question, please? Okay, so now let's multiply. So the January 1, what I'm expecting you to have in your sheet of paper, it will be January 1, 10,000 times 12 divided by 12 times 1.1. Multiply it out. Let's get one. What January was? What do you have in January 1? You move to April 1, it will be 4,000 times 9 divided by 12 times 1.1. You get your figure. Then September 1, which is a share, it will be minus 3,000 times, is it 4? 4 divided by 12. So you have something which is going to be minus something. And you now sum everything up. And that will be your weighted
Right.
average.
So I don't understand that.
Okay,
I'm
which part?
lost.
Let me explain it. Which part? Which part?
No, the one you just finished
Let me
saying
see
now.
what you've written down. Let me hear what you've written down. Explain. Let me just hear what you've written down.
No, you said we should multiply 10,000 by 1.1, right?
No, 10th in Jan. Okay, you should have this in your sheet of paper now. January 1, you should have 10,000 times 12
12
divided
over
by
12.
12. Yes,
Yeah, I
times
have that.
1.1. You should have equals to,
Yeah,
what do you have? Do that one first.
11,000.
11,000. I'm sure everybody got 11,000 for that one, right? Good.
Yes, I
Let's
got
move to the one for
11,000.
April. Let's move to the one for April. It will be 4,000 times 9 divided by 12 times 1.1. What do you have for that one?
3,300.
3,300.
3,300. Let's put that one two by the side, Abby. Let's now move to the next one. The next one is what?
Minus
September, which is
3,000.
a share report, which is 3 minus 3,000 times 4 divided
4
by 12,
divided
Abby.
by 12. Yes.
Yeah, so what do you
That's
have?
minus 1,000.
Minus 1,000. Now, the what you have
So
for
you said minus
January,
3,000 times 4 divided by 12.
yes, you know, it's a share repurchase. You are buying back.
Okay.
Does
So
that
can you
make
take
sense?
that calculation again for the share
From where?
purchase?
Is it from September or from beginning?
No,
Okay,
for
for
the
share
share
repurchase,
purchase.
it's minus 3. Yes, minus 3,000. Yes, minus 3,000 minus 3,000 times times 4 divided by 10. You know, from September to December, it's 4 months, Abi, with your fingers. Use your fingers, September, October, November, December.
Okay, okay,
So
okay, okay,
minus
okay.
3,000 times 4 divided by 12. What do you have?
1,000.
Minus 1,000. Don't forget, it's minus, minus 1,000. Now, sum up 11,000. I think it's 3 you got for the second one, then 1 minus 1,000. Sum it up. Let's see what we have. That will be
That's
your weighted
14,
average.
3.
That's what?
14, 3.
Is it 14,3? Is that what
You
another
said
person got?
you said 11,000 plus 3, 3.
Yes, what you have in the January, April, and September. 11,000.
Okay, that would be 13, 3.
13,3. Remember that minus is minus minus 1. You understand? I think that's where you got the, you were adding it again. You're adding that one. You subtract it. Remember that one is minus. It's a share repurchase. You are buying back from the general public. I don't know if did Matilda get the same thing too?
Yes, I did. I got minus 1,000.
Yeah. So what did you get in total when you summed it up?
Okay, so I should add the 11,000, 3,300 and minus 1,000.
Exactly. So what did you get? So that will be your weighted average.
Mm, mm, 13,300.
Thank you. So that's your weighted average. Did we all get it? Now scroll down. Let's see what they have. You can scroll down. Let's see what they have. Thank you. You can see that's our weighted average. Is it clear now, everybody? Are we fine? Yeah. Yeah. So Johnson Company has a net income of 10,000 and paid 1,000 cash dividend to its preference shareholder and paid 1,750 to its common shareholder. Calculate Johnson's basic earnings per share. So who wants to help? You remember the formula is net income minus preference dividend divided by weighted average number of shares, right?
Yes. Should we solve it? Hello?
Yes. Can you hear me?
Yes. Are we to
Okay.
solve it?
Yeah. So okay, now let me give you a clue. You know, we said the numerator is net income minus preference, and we've calculated our weighted average, Abi, to be 13.3, Abi. Now let's
Yeah.
help me with the numerator now. So what's our numerator? What's the figure for our numerator?
The net income is $10,000.
Okay.
The preferred dividend should be 1,750. No, this common shareholders. Um, Cash dividend to his preferred share. 1,000 is the preferred dividend.
Okay. What about the other one? Are we using it?
We're supposed to use it though,
Okay, so where do we
because
put it? Where do we put it?
we should add it to the cash dividend to it. Should we add it to the net income?
I'm asking you. I don't know. I'm asking you. I'm asking you. I'm asking you. I don't know that.
Cash
Yeah,
dividend
help
to his
me. Oh yeah,
preferred
everybody.
share.
Somebody else should help now. Yeah, somebody else should help. Somebody else should help. Somebody else should help me. Oh yeah, now what do we do? She
So
has said that they will use the 1,000, the private okay. Go
for
ahead,
the
sir.
common dividend, we are not going to do that because we are only asked to put in the preferred dividend. The common dividend holder are the same set of people we are trying to calculate the basic EPS for, I think. And in the formula, it's just the preferred dividend that we need to bring in. So we are not expected to use the other one.
Thank you. Thank you very much. Thank you very much. Sweet. So automatically your common, so you are entitled to only pay preference dividend fix. You are entitled to pay preference dividend alone. You understand? That is what you are entitled to pay. So common shareholder is none of your business. Do you understand? So there are some parts they will just put you, they'll just give you just to confuse you. So automatically the one for the common share, you neglect it. It's none of your business because the one the person you have signed off to pay for is the preference dividend, and that's the person you have agreed to give the money. Others you let go. You understand? So you let go of the other one, the one you have agreed to. I'm committed to only paying preference dividend. The others. So let's calculate this and let me know. Yes, now. Yes. So we are.
Okay. The answer is 9,999.92.
That's which one now? Is it the numerator?
Oh, are we still talking of the numerator? I was even
Or
thinking
which
it's
one
the
are you
answer
calculating? Let
totally.
me see.
I was counting doing the whole answer.
That's for EPS, Abby.
Yeah,
Okay, so how did you get that?
you said we should not confuse ourselves with the common shareholders, so we should just
Okay.
make use of the preferred shareholders that is fixed. So I minus the 1,000 from the 10,000 and divided it by the weighted average share we got.
Okay. Anybody else? But looking at it, how did you know even in that, you can't give you 9,000. We had tried
Yeah.
again.
So yeah, I think she just did it directly with the calculator. 9,000
So you have
minus
to be careful.
10,000 minus 1,000 divided by, so the calculator would pick 1,000 divided by 13.3, then subtract from 9K, I think.
Yes.
So it's actually 67.6 or 0.67.6. So it's 0.68, yeah.
We are try it again, Matilda. Let's see what you get. Try it again, Matilda. Let's see. Okay, it's just two people that is on this call. Others are not talking. Oh yeah, now. Where are others now? Are they on physically? Are they in physically? Where are the others? It's just two people that are on this call. Where are the others now? Talk to me now. Are you angry with us? Yeah, Matilda, try it again. Let's see what you will get.
I'm still not getting it though. I'm still getting 9,000 something.
Okay, so this is it. This is what you will do. Let me explain. This is what you will do. You know, whatever you get in your numerator. What did you get in your numerator?
9,000.
Put that one aside. Abby?
Mm.
What did you get as your denominator?
My denominator is 13,300 now.
Put that one to aside. Now start again. Clear your screen. Now put 9,000 divided by 13,300.
9,000 divided by. Oh, 0.67.
Thank you. Makes sense now, right?
Yeah.
So are we fine now? Are we good to go? Hello? Are we good to go?
Yeah.
Hello, can you hear me? Okay, so anybody else? I think we all tried it and we are fine, right? So now move down a bit. Let's continue. So that is your basic earnings per share. So there's no problem. Everybody remains the same. Ordinary share remains the same. Debenture remains the same. Everybody remains, and we are all fine. There's no problem. Understand? Like I used to say, solving questions, you will see different type of issues. Pick up so many questions, as many as possible, then solve them, and you'll be fine. There's no problem. So you can go ahead now. The next one is, if any one of these people now decide to convert, are we together? Preference shareholder decides to convert. Debenture holder decides to convert. Stock option decides to convert into ordinary shareholder. Somebody might ask me, why is it that everybody is converting into ordinary shareholder? Do you understand? Why we see that everybody is trying to convert into ordinary shareholder?
Maybe
Hello?
because of the capital appreciation.
Maybe capital appreciation, like you said. Maybe you now feel like, is it better for us to move into and get plenty dividend? Understand? So that's good. So let's now go down. You don't need to cram all these formulas. You don't need to cram anything. Just go down. Go down. You will see so many funny formulas there. Go down. You don't need to cram this formula. Just remember the simple basic formula that you already know. Then you're good to go. You're good to go. So now this is the first one now. If, for instance, now preference shareholder wants to convert into ordinary shareholder. Are we together? Preference shareholder wants to convert into ordinary shareholder. So go down. No, you have shown us the answer. Hey, Matilda will say she has not seen it again. Abi, did you see it this time around?
I saw
Okay,
something.
so now Okay, now let's go. So net income is 4.35 and had 2 million shares of common stock outstanding for the entire year. Are we together? 7.7%, 5 million per share value preferred stock is convertible into common stock at 1.1 shares for every 10% par value. Calculate basic and diluted earnings per share. Oh yeah, now who wants to? Let's try the basic earnings per share first. Then we'll now see what the diluted looks like. Oh yeah, now let's try.
Hmm? Where's the weighted average
Oh yeah, now
number
what do
of
you think is the weighted average? What do you think is the weight? What do you think is the weighted average?
Is it
What do you think?
ZZ corporation that we're doing?
What do you think is the weighted average? Yes,
Hello,
yes,
sir.
that's ZZ Corporation. Thank you. Yes. What do you think is the weighted average?
Is that for Matilda or anyone?
Eh?
Is the question for Matilda or anyone?
No, everybody. What do you think is the weighted average? Anybody that wants to try.
Okay, so because of the statement, common stock outstanding for the entire year, then it means that it's 2 million times 12 over 12, which is the same thing as 2 million.
Thank you. So automatically, they didn't bring in any new shareholder. Nobody came in and nobody went out. So automatically it is 2 million, right? Are we together? Matilda, is that clear now?
yes, you multiply it by 12.
So it is 2. Thank you. It is 2 all true. Thank you. No, you don't need to multiply by 12. Oh.
Mm.
Does it make sense?
Oh, okay, that's 12 times
It is
divided
when
by
you are
12.
okay, let's do it like this. You multiply by 12. That's going to be 12 divided by 12, Abby.
Yeah.
So that's 1, Abby. So that's 12 divided by 12 will give you what will it
Mm.
give you?
12 divided by 12 is 1.
Thank you. So what would the common shares outstanding be?
2 million.
Thank you. Sweet.
This million, are we writing it in full million or we should just do 4.35?
And for me, I feel so that you will not make mistake. You can write it in full. You understand? Because I noticed that people might mix the figures up and before you know it now, they are off. Just write it in full. It won't take you anything. Write it in full and divide what you want to divide and you're fine. But constant practice helps you a lot. So you are used to all these things. You understand?
Um,
So I said, what's the preference dividend in this question? There's no
Okay.
preference dividend.
Oh yeah, read that part. Okay, so we start with reported net income of 4.35 and add the 2 M shares of common stock outstanding for the entire. Okay. They now said ZZ 7%, 5 million per value preferred stock. You can see
Oh, I
7%.
see. I
You
see.
can see. So at that
Yeah.
point, you are still a preference dividend holder. It is now convertible into ordinary share at 1.1. So let's work the preference dividend. Tell me the preference dividend
yes.
first before we move into, then you calculate
Why
your
did
basic.
there's no 5 million?
No, it's not 5 million, Masida.
Eh?
I just used 5 million. No.
Your preference dividend is even more than the net income. You want to put the company into trouble. The company will just run away. You understand? So the shares the person bought. Wait, let me explain. The shares the person bought is 5 million.
Mm.
I don't know if that's clear. They're now
Okay.
saying 7% of it will be your dividend.
Oh.
Makes sense now, Abby?
Mm.
Okay, yeah, now go ahead now.
So that means 7% of 5 million.
Thank you. Will be your preference dividend. Thank you.
That's 350.
Perfect. Now you can now calculate your basic earnings per share, Abby.
Mm.
Go ahead, please.
Yes. 350 divided by, no, it's like 4 million. This should be like 2.
No, is that true? Is that 2 you got?
That's 4 million divided by 2 million now.
Is it 4 million? Watch carefully. You know it's 4.35. Oh. Abi minus
Yes,
350.
that's
Abi
4,350,000 minus
yeah.
350,000. That's 4
Thank you.
million.
Divided by
Divided
2.
by 2 million.
Thank you. Did any other person get that answer too?
That's equals to 2.
Thank you. Did any other person get the answer too?
Yeah, that's what I got.
Thank you. Thank you. Any other question, please? So we've gotten our basic Abi. Now let's move to our diluted earnings per share.
So let's continue. It now says that is preference stock is convertible into common stock at what? At a rate of 1.1 for every $10 per value. So how do we go about that one? How do we go about that one? Who wants to try?
Okay, so let me try. So it actually means that for every 10 preferred stock,
Mm.
we'll be giving you a 1.1 ordinary share capital,
Yes.
more capital. So the best way I think I can do it personally is the 5 million preferred shares, because that's in dollars, divided by the $10,
Yes.
which is what we are expected to base our conversion to, then times 1.1.
Perfect. Perfect. Sweet one. Perfect. Because that 7% is the preference dividend. I mean, now you are now converting into ordinary shareholder. I mean, now you are looking at it like, okay, this company is making money. I've invested in this company and I have it in my clause to convert. If I decide to convert at this point in time, it will make sense. So let me try it first. Let me do the calculation. So that's why you now decide to, okay, let me forgo the fixed dividend I get annually and see if I convert into ordinary share. Would it make sense for me? So that's why you're now doing 5. You are converting at 5 divided by that 10 per share times 1.1. I don't know if Matilda got it. Are you fine?
Yes, I am.
Okay, so what did you have? What did you have? What amount are you converting into?
5 million.
No. What's the total amount when you divide that? What did you get? What did you
I'm
get?
trying to do it.
Okay, please go ahead. Please
Divided
go ahead.
by 10, then multiply by 1.1.
Yes. So what did you get?
1.1. 550,000.
Thank you. So how do we go about that 550? How do we go about it? Who wants to help? How do we go about it?
How do
How
you
do
go
we
about what?
how do we go about that 550? How do we go about what do we do with it? You know the person has converted. So how do we include it in that our formula?
Okay, um, let me just try. So because now we are assuming that the conversion is going to happen at the end of the year, right? We add it to the number of shares, the 2 million.
Okay. Okay, so just tell us the formula. What would the formula now be if you want to include it? Tell us, just give us an overview of how it will look like.
The formula of what now? Of diluted EPS or
Okay, you can
weighted
just
average?
tell us how the figures will look like in that formula now. Tell us how it will look like.
Yeah, I'm talking. So is it for the whole thing or for the denominator, or which one are you asking?
For the diluted earnings per share. Now, you know you are told you calculated
Okay.
your basic. Now it's diluted
Oh,
earnings
okay.
per share now.
Okay. For my own understanding, so the profit initially, right? The profit of 4.35
Mm.
did not include the preferred interest payment, like the dividend, the preferred dividends. it didn't include it,
Mm.
right? So which means that I'm not expected to add it back.
Okay.
Yeah, I'm not
So
expected to add it back. But if I was given preferred, if I was given net income after preferred dividend, then I need to add it back. Then also consider, yeah, I think that's that. Then the denominator, I increase the number of my shareholders, like the number of shares, the weighted average number of shares, from 2 million to 2.550.
okay, so what will be okay? Just tell us the numerator will be what, then denominator will be what.
So
And I
the
think my
numerator should be 4.35 divided by 2.550.
2.550. Sweet. What about Matilda? You want to try to?
No, because I don't know it though.
Oh yeah, try.
Yeah, I'm lost. This one is more complicated though.
No, it's not. Oh yeah, now just try something. There's no harm in trying. No, there's no score for this one.
Sorry, I'm not trying. I just want to ask a question.
Please go
Are we
ahead.
supposed to be given tax rate? Because the question did not give us tax rate. So are we supposed to assume a tax rate if the question did not give us a tax rate?
Eh? No, okay, so this is it. I will explain the tax shortly. But I want her to say something first before I continue. You understand? So once she says something, let me hear from her, then I will explain why the tax rate, where tax rate comes in.
Okay.
Eh, I don't know honestly because this formula is more. Is it okay? We'll add the 550 to the
Like
net
I said, you don't
income.
need to cram the formula. I told you, you don't need to cram understand the basics. You understand?
Then that's
Understand the
550.
basics, then you're fine. Mm-hmm.
That 550 that we got, we'll add it to the 4.35. That's the 4.35 million minus the 350. So we'll add the 550 to it, and then
Okay.
divided by the average of 2 million, divided by the average of 2 million.
Okay.
That's
Mm.
the extent I understand.
Okay. Okay. Yeah, let me help out then. Okay, so this is it basically. You have a preference shareholder. The person is enjoying fixed dividend. Automatically, when the person decides that, okay, let me see if it makes sense to convert, at that point, you are not going to enjoy that fixed amount of money at the numerator again. You are now going to go and join other people at the ordinary shareholder. That's why I say you don't need to cram the formula. Just know that as the person is converting a preference shareholder, you take the person off from that numerator. Whatever you're converting, you now add it to the denominator. And we got 550 Abi. So it is going to be your net income, which is 4.35 minus 0 because we have converted the preference dividend, Abi. You take that 550 and go and add it to your ordinary share, which is 2 plus to that 2M plus 550. I don't know if that's fine, Matilda.
Then where would the 350 go to?
You've converted it now. You are not going to enjoy that service again. Because now you've
Oh,
told the
that
person that
means you are off the service, so that's 0.
thank you. You are too much. Wisdom will not finish you. You understand this thing very well. Because you are off that physical service, you are not going to enjoy that service again, of that enjoying that fixed amount of money. Now you have decided, let me explore my option of converting it to ordinary share. Are you guys fine?
Yes.
Thank you. Thank you. So now do that and let's get the answer. Let's get the answer. What did we get in total for our basic, diluted and basic? And let's see how we will choose which.
I got 1.70.
I go 1.71.
And you approximated the 5. That's 1.7. Hello.
Yeah, what's our answer, please? What did you get, please? Sorry.
1.70.
Then what did we get for our basic?
Basic was
Our
two.
basic is 2.
Okay. We got 2 for our basic and our diluted is 1.70. Sweet. So let me give you the shortcut here. The shortcut is whichever is lower between your basic and your diluted is your answer. Please, let's take note of that. But I will now explain further. You understand? Once you calculate your basic, once you calculate your diluted, whichever is lower. So at this point, which is lower? Which is lower? Yeah, talk to me now. Which one is lower?
1.70.
1.70. So what's that? What's our answer?
1.70.
Thank you. So at that point, it makes sense for the preference dividend holder to convert. How would you know that? How would you know? Look at it. You have a fixed amount of what? Fixed amount of money as a preference dividend that you'll be collecting is 350, Abby. Now, and you've converted into ordinary share, which is 550, Abby. Multiply that 550 times 1.71. You understand? You see, you get a big amount of money as profit, as dividend. Yeah, try it and see. What did you get when you multiply 550 times 1.71?
935,000.
That is the dividend the preference shareholder will be getting if it converts to ordinary. So why won't you convert at that point? You can see you are getting more money than that 350. So it will make sense for the preference dividend holder to convert. So automatically, when you see the answer, always go for the lower between the basic and the diluted. I don't know if that's fine now.
Sorry, what do you mean by when you see the answer, always go for the lower?
Okay, that was why I said that. Okay. The answer is basically when you see the lower, I will now explain the concept. When you see whichever is lower between the basic and the diluted is your answer. If your
Answer of
diluted is
what?
lower, answer you will choose, what you will choose as your answer. You know, you have 2, which is your basic, and 1.7, which is your diluted. So the answer you will choose in your option will be 1.70. That's the answer to the question.
For diluted EPS, is that what you
Mm-mm.
mean?
For the 2, because we are told to calculate basic and diluted and to choose which is better. Is it better to convert or not? Does it make sense now?
Yeah, okay. I think I get your point now. But in this question now, okay, so you're saying that in an examination question, they will
Yes.
ask us which is better.
Yes. No, they will not even
Because this
ask you. They will
question
just say
only asks us
calculate
to
your basic
calculate
and
basic.
diluted. So you now choose between the lower, which is lower between the 2. And this point, it is diluted that is lower, which is 1.7. So that will be your answer.
Sorry, I'm lost. Sorry.
Okay, yeah,
Sorry.
explain. Let me just maybe I try and explain the way you understand it. Maybe I'll come in
Yeah,
there.
so this
You understand?
question now, this question has asked us to calculate basic and diluted EPS, right?
Yes.
Does it mean that when I see this kind of question in the examination and they ask me to calculate basic and diluted EPS, I just pick the lower?
Yes, exactly.
Why?
The lower of the 2. Why? Yes, I just explained now that the reason why it is better to pick the lower at that point in time is that let's now convert the dividend and see the dividend they will earn for that particular period. You understand? So if, for instance, now, you know, at a preference dividend that you are earning 350, Abby,
Mm-hmm.
if you decide to convert, what is the share you have? 550, Abby?
Yeah. No, I totally get
times
that
the
point.
dividend, which is 1.71, you get 930 something, Abi.
Yes,
So
yes,
it is
yes,
you
yes.
the dividend you will get will be much more higher than the 350. So that's why
Okay,
it's good to convert for the preference dividend holder. And that's why it is when it is lower, it is better. Am I
okay.
confusing you?
I I actually get your point. To be honest, I
Okay.
understand what you're saying. I'm only
Mhm.
just confused that maybe this is one of the exam scope, like the way to answer question. Naturally, if I was not in this class and I see this kind of question, calculate basic and
Mm.
diluted EPS, I naturally would be expecting two answers, right? The
Okay, I
basic
get what you're saying. I get what
and
you're
the
saying. I
diluted
get what you're
EPS.
saying. But at this
But
point,
now,
you have to make a decision. You have to make a
yeah,
decision.
yeah, so that's what I'm saying. That so the question, because if I'm to make a decision, I would expect the question to say that okay, calculate the basic diluted EPS and pick whichever is good for the investor.
I
Now,
think I get what you're saying. So this is the way the question will come. You understand? Like
okay,
I used to say, to be clear. You understand? They will give you calculate the diluted earnings per share, or they will tell you, is this preference dividend anti-dilutive or not? It will
yeah,
be clear.
yeah,
Don't worry, when we start solving questions, you should like to be clear. But I think they just give you this one so that you'll be able to practice basic and practice diluted and know which one is better.
exactly.
I think I
Okay,
get what you're saying. Mm. So are we fine? Is Matilda there? Are we fine?
I'm here.
Okay. So what's our answer here now? You can go down. Let's confirm.
so I have a question again, and I think this will help us as a group now. Are we
Okay,
better at
please go ahead.
converting?
Please go ahead.
Are we better at converting into two decimal places? Is that the best?
Well, it depends. It depends on the question, but you can leave it to 4 or 8 self. You understand? Leave it to 4 or 8. You now depend. Then when you now see the answer, you now just do the roundup. You understand? You can leave it to 4 or 8. You understand? That's what me I usually do. I'll just leave it to 4 or 8 decimal place self, if possible. And when you now see you now choose which is better. You understand? You now round up. But anyone works for it depends on, but you will still get the same answer. But it's better you just look at it and round up properly.
Yeah, that's fine. Just want to be sure.
Okay. Any other question, please? Is Matilda there? You fine? Yeah, now good. Let's see what did they get.
I've passed it.
Yeah, let's see. 1.71, Abi. And that's
Yeah,
exactly what they got to. So you can see which is better, which is lower, Abi. 1.71. So if the answer is to be, you go for the lower, Abi. So are we fine?
yeah.
Any question, please? Okay, now back to the question of your debt of your debenture. We talked about debenture, right? We talked about what's it called? Interest and debenture. So this is where interest comes in. So if, for instance, you borrow money from a company, you borrow money from a company, borrow money from a company, you borrow money from a bank, the bank believe they are going to what? You are going to use that money to trade.
I don't know if you guys are following me. You're going to use that money to trade. So they believe you're going to use that money to trade. So automatically, you should be getting income. Abi? So for instance, now you go and meet a bank and you tell them, okay, I want to borrow money. I want to borrow money. They look at you and say, okay, good, 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 good. You borrow money. So how much do you need? They tell them, okay, I need so amount of money. You get your financials, they give you the money. You understand? They now start charging interest. So a logical person believes that you are going to use that money to trade, because you can't expect to borrow money now with a bank and go and use the money to buy cars for your team. You understand? They don't expect you to go and use that money to buy cars for your team member. So with that, there's a big problem. You understand? So automatically, you believe you're going to use that money to trade. That's why government usually tax interest. I don't know if you understand what I'm saying, everybody.
Mm-hmm.
Are we together? Are we together, everybody? Can you hear me?
Yeah.
So
Yes,
that's
so
why
it's
that's why government usually tax interest. That's why government usually tax interest. They will tax interest and say that, okay, since they believe that you collected money, you are not using money to buy a house or anything, you're using money to trade, to make more money. So that's why they are taxing that money. They believe that you'll have gotten profit. That's why they are taxing that money. You understand? That's why you see interest is usually 1 minus tax. So the next is, okay, let's continue. If you are now converting the interest into ordinary share now, how do we go about it? How do we go about it? How do we go about it? Who wants to help?
Okay. So can you see your question? The question again.
Okay, so how would you go about you converting debt into ordinary shareholder now? How would you go about it?
Okay, so converting the debt holder into ordinary shareholder.
Yes,
I
how
think
would you go about it?
what we should do is the same way we did the preferred stock holder.
Mm, mm,
In this question, let me see. So they said each of these bonds is convertible to 120
mm,
shares of common stock.
mm,
Each of these bonds is okay. It's converted to 120 shares of common stock holder.
mm.
So I think that should be 2,000. So they actually issued 2,000
Okay, let's
bonds.
do it like this. Let's do it like this. Let's do it like this. Let's take it one
Okay.
by one. I don't want us to rush. Okay,
Mm.
so let's take it one by one. You know, so what's the first thing when you see any question that has to do with diluted? What's the first thing you would do? Remember, I said you would do something. You will always calculate your basic earnings first. I don't know if that makes sense, Abby.
Okay. Yeah.
So now let's calculate our basic earnings per share.
Okay.
Or are they giving us?
Just a moment.
Thank you. But did you get how they calculated it? Is Matilda there? Did you get how they calculated it? Hello, is Matilda there? Did you get how they calculated it?
Sorry, can you come again?
Okay, did you get how they calculated our basic earnings per share?
For which one?
For what's it called? For this EPS with convertible debt.
That's shareholders, common stock. I'm not seeing any net income.
Earnings is the same thing as net income. Earnings. When you say something, when you say earnings, Abby, when you hear
Okay.
earnings, it's the same thing as net income.
Okay, so 2.5 million minus preferred shares should be um, wow. I did not see any preferred shares.
Okay, so what do you think? What do you think?
At common stock outstanding for the basic earning per share. Yeah, I'm seeing normal basic earnings per share as $2.5 now.
Yeah, you saw it in the screen or you calculated it, you got your own answer.
I'm seeing it here now. That means it has been
Yeah,
given.
now calculate it yourself. I want to calculate it on the screen. And I want to see the way you will calculate it. How did you get your own 2.5?
No, look at it written here. I had 1 million shares of common stock outstanding for the entire year for basic earning per share of 2.50.
So how did you get it?
I didn't calculate anything again now since I've seen the basic EPS.
No, now you are trying to calculate it. I want to see how they arrived at that 2.5, whether they are wrong or probably you understand. Try and calculate your own and let's confirm if they are wrong or not.
If the earnings is 2.5 million, the preferred shares. I'm not seeing any preferred share. I'll be preferred
So what do you
dividend.
do? So what do we do? Yeah, now talk to me now. What do we do?
Yeah, I've run out of ideas, honestly.
Okay, so if there's no preference dividend, automatically it will be zero now. You understand? So it will be earnings minus zero. So automatically you don't have a preference dividend holder as your capital structure. You understand? So it will be zero. So it will be earnings minus zero divided by what? Weighted average number. So what's our weighted average number of shares? 1, Abby. So it's going to
1
be
million.
2.5 divided by 1. Thank you. So that's how they got
So,
that 2.5, right?
so if you don't see any preferred dividend, there's no need to calculate it. You should just take it as zero.
Yes, you don't. Yes, see, except this, it's not given in the question, it's not given. So automatically your capital structure does not have a preference dividend holder.